Hey guys, so we're going to talk about a trade from yesterday on the Micro E-mini NASDAQ, and this was October 21st, 2025. So first thing that I did was check my 4-hour and my 1-hour. We had a 4-hour bearish bias, and then we had a 1-hour bullish bias. So I was watching market open to determine if I was going to go bearish or bullish because the 4-hour and the 1-hour, if they're opposing, I feel like in my experience, you'll figure out how to understand like what is looking more probable for you, and there will be like so many different things that you start to understand and realize like this and that. But anyway, so what happened on market open for me was that we immediately swept out Asian and London session lows. So being we swept out Asian and London session lows, and I usually take my first trade within the hour or two, which was bullish. I decided that I was going to look for a bullish trade. I'll go long on a trade because I was bullish on the 1-hour, and also we immediately sweep Asian and London session lows right at market open, like right by like 9:40 or something like that. We had swept both of them. So I don't have those indicators on the screen anymore. They've hopped ahead to today's trade. Sorry. Okay, sorry. So I just immediately start watching price action. I'm watching on the 5-minute chart. I usually make all of my trades off of the 5-minute chart. The 15 could be a good confirmation chart to check out. If the 15 is lining with you, that's even better confluence for you, yippee. But the 1 minute, it's just too quick. It's too hectic. A lot can be happening, and the 5-minute just holds a little bit more power that I would like to aim for. So anyway, let's look at the trade. Market opens, sweep out the lows. I'm looking for a buy. I see this first fair value gap that I see gets touched in and kind of respected. So that's opposing my bias. So I'm just kind of ignoring that because this is a bearish bias, and I'm going to go long. If I go anything at all, it's going to be long. So this was a bearish bias. So I was kind of watching this fair value gap to see if it got inversed, but it didn't. So we watch it get respected, and we just keep going. Plus, this is massive manipulation time right here, 9:40, 9:50. Kind of working into maybe a potential trade, trading time, but whatever. Okay, so now we have prices kind of consolidating here just a little bit, and also just manipulating. I mean, people might be thinking we're going up here. We have the next confluence, which is a pretty small but still existing 5-minute fair value gap right here. So price just goes straight down through it, disrespects it. Yeah, that was nothing for me too. That confluence didn't do anything for me. And then we have another confluence get formed right here, this bigger one. And this is my first sign of, oh, something's happening for me. See, price starts to push directly through this fair value gap right here and inverse it, pretty much inverse this fair value gap and went right through it and disrespected it, which disrespecting and inversing a bullish or a bearish fair value gap is going to be a bullish confluence, right? Because this is showing that like price isn't just going to come back in, touch this area of liquidity, and then like keep coming out. You know what I mean? Like it came all the way through. So that was an inverse for you. Oh, I'm sorry, this way. This was the inverse for you, for me. Great. So that was a good sign. Inversing this bearish fair value gap is a bullish confluence. I'll say that again. That's actually important. Inversing this bearish fair value gap is a bullish confluence. Okay. So price is coming up, and now we have this little tiny fair value gap that gets formed, okay? So now I'm watching this fair value gap, and I'm like, ooh, are we going to come through and respect it? So price comes in, and price starts moving back out. So this is respecting it. Now I'm like, okay, great. So I have the inverse fair value gap getting, I have an inverse fair value gap. Oh, my watch is backwards. I have an inverse fair value gap. Then I have a 5-minute fair value gap getting respected. And what I did next was I drew out equilibrium right here from this swing low down to this swing high, because this is now the range that I'm kind of like focusing on. I would just lump this one right in with them, because this whole range is where I'm looking at. You know, this whole range is where I'm looking at. So now that we touched in on this and we're kind of like coming out of it, I'm like, okay, well, now I need a third confluence. Like, that wasn't enough to enter a trade off of. And if I had entered the trade off of it, I probably would have got stopped out, because look what happens. This candle right here, let's make it bigger so we can see it. This candle right here, this one right here, it comes straight back down into equilibrium. So this 50 line right here, 0.5 is halfway point of this range, and that is where there are discounted orders, basically. So price comes down into equilibrium, and that was it for me. I was like, okay, hi Penny. I was like, okay, that's it. Now I have my third confluence. So now I'm waiting for my clear entry. Okay, so what happens? We come up on this candle. We don't close out of the area. I wanted to wait for us to close out of the area. So what I did was, oh wait, no, actually, I don't think I did. I think I did actually enter right here off this. Again, this is back testing. There's clearly not a trade on this screen, but I'm back testing this trade that I found to show you guys. So entering right here off of this candle closure, this candle closed right on. It would have been better if it closed out of there. Really is more ideal, but I would have entered closing candle right here, leaving equilibrium and leaving the fair value gap, leaving a high confluence area with a bullish bias, with bullish power. So that's kind of like what you want to look for. So now what happens is I set my take profit. This take profit here was drawn all the way up to a previous prominent high. Actually, no, you know what? I picked a midway point of a fair value gap. This is a fair value gap on the 15-minute right here. And I picked midway because very often do I see price hitting midway of fair value gaps and not the whole thing. So I picked my take profit to be midway of that 15-minute fair value gap. I put my stop loss down here at 1.14 risk to reward ratio. And there was a moment of a little bit of a nightmare right here when this candle did wick down a bit, but definitely didn't wick down enough to stop out. And then here we go. You enter, why is it doing that? You enter right here. Well, you've already entered, sorry, my bad. Candle comes down, wicks people out a little bit more. Price moves up, hits take profit, and that was the trade. So basically this trade, I actually didn't find this trade today until about 11:30. Now that's pretty late in the day. I really wouldn't have wanted to trade unless it was like 9:30 to 11:30 is like pretty much like the max. Like, I really wouldn't want to trade past 11:30. At 11:30, if I haven't found a setup and it's like not a day, then it's just not a day. Anyway, this trade was based off of liquidity sweep, bias, mainly fair value gaps, and equilibrium. I see a lot of my trades hitting TP after equilibrium and a fair value gap combination. So hopefully this observation, this trade, whatever helps, and talking about this trade was helpful to you. I'm gonna go now.